Cece, welcome to the Orbit. It is Monday, February 12th. As we do each Monday, we do Income for Options Weekly, where we check in on the setups, the volatility, the zero DTE moves, the weekly expected moves. We're looking at SPX right now. We are almost an hour and a half into the trading day. You can see the expected move for today is now 0.2%. That is just 12 IV. That is very low. It's basically as low as you're going to see it. One of the reasons for the low volatility today is because the market is looking towards tomorrow morning, where we have the CPI print. You can see here on the chart, I'm hovering, it's a 0.6% expected move to tomorrow at 15 IV. Not that that's historically high, but it is obviously higher than 12 today. And then you look at the day after that, and it drops back to 13, and then back to 12 for the end of the week. That end of the week includes PPI. But the CPI is clearly the thing that traders are looking for the most, with the most potential of volatility that day. But this is, again, this is very low volatility across the board. So we've got about a 0.2% expected move for the rest of the day. That puts those levels at about 50-20 in SPX and about 50-50 on the upside. That is very narrow. Obviously, if you are trading zero DTE, it's going to be tough to find large premium sales without going very close to the money. A lot of traders sort of take their medicine on that, go out of the money beyond the expected moves, and try to basically take a high probability with a smaller premium received, but a higher chance of those levels not being violated. But it is not, you are not going to be getting large premium for that. Out to the end of the week, we've got about a 1% expected move. That's about as low as you're going to see it for a week. So again, it's low volatility across the board. To give an example of today's expected move, let's just go into an iron condor. This always gives you a quick sense of those expected move levels and what kind of premium is being received. So this is risking 300 to make 200 with short strikes of 50-25 and 50-45. You see how narrow that is. If we take these levels and make them a bit wider, let's go down to 50-50 on the upside and 50-20 on the downside. Now we're risking 380 to make 120. We go $5 wider, and we are now below 100. A lot of traders here would be looking to, say, sell a credit put spread that is maybe at these levels at 50-20 level or up there at the 50-50 level. But you can see you are not getting a lot for those kinds of widths, and that is because that expected move is 0.2%. Checking in on the Qs, we are up about a quarter point this morning, about a 0.3% expected move for the rest of the day. So just the expected move for the rest of the day is just a little bit more than the move we've seen this morning. Going out to tomorrow, we've got about a 0.8% expected move, and out to the end of the week, about a 1.4% expected move. IWM is an interesting one here. We've got out to the end of the week, we've got about a 2.2% expected move. You can see where we are on the historic chart. We are back above 200, and we're approaching these highs that we saw into year end. That was right about 205. So that's something to keep an eye on. IWM has been rejected at this level several times over the last year and a half. So that's something to look for in an overall market trend. If this were to break out above this 205 level, that might be showing some sort of froth and some sort of upside call buying, probably across the market. We have some earnings this week that includes Coinbase. It's a pretty jam-packed earnings calendar. Check that out on Options AI, obviously, for the expected moves. But you've got Coinbase, you've got Cisco, you've got DraftKings. There's a bunch of interesting names on there. None of the big, huge mega cap companies, but a lot of mid-sized and obviously small cap this week. And of course, the next big one on the calendar is NVIDIA next week.